Trading Market Technicals Morning Call video for Thursday, August the 8th. The pullback continues. Dow down 48, Nasdaq down 11.5, S&P down 6, Russell down 780, and we are positive in the pre-market, up about 3.5 handles in the minis in the electronic session. So where do we go from here? Well, I see that I got many emails stating that they took advantage of that volatility play, buying the VIX on Monday morning. And some of you actually took it on Friday when we mentioned it Friday on the morning call. Monday was really the more the conviction that said, look, we need to buy this. And the reason why was, and again, I don't want to repeat myself, but we have a lot of people that sign up for the morning call. Just wanted to go over that. We did have the outside of the Bollinger Band close, actually 2 times out of the band, and then we actually have retraced higher. This is just obviously, as you can see here, retracement rally, but can it be a deeper correction? Can the VIX be bottoming? And I say yes, and I'm going to tell you why. We have positive divergence in our MACD, we have positive divergence in stochastics, and we have positive divergence in the RSI. We do have a black candle, so that could mean some sort of a pullback, which is fine. I think that there's still time for a volatility play to be buying VIX. You could buy the VXX. But one thing that I want to make perfectly clear, this is not an instrument to be holding. This is something for a 1 day, 2 day, maybe 3, 4 days. If that, I would not want you to be putting it in your portfolio because it does erode over time. All right, just make sure that we all understand that. But the VIX, as of right now, and I do a lot of analysis off the VIX and the dollar, clearly sees that this looks like a bottoming process. As you can see, it has been for the last several months, actually all of 2013. We are in here now, and this is the quarter 20-day moving average. So we do have a little bit of a black candle, and I tell you, I wouldn't mind a little bit of a pullback to look to enter and re-enter short the market. I think the market has a little bit downside, further downside. Seasonality, we come into weak time of the year up until October when the volatility usually peaks going into the end of the year. And then, of course, we have that so-called Santa Claus rally. So what I'm looking for is bottoming prices in the VIX and weakness in equities, okay? Meaning that we should have some volatility picking up. We do have some light volume, so the moves will be skewed one way or the other, whether it be to the upside and or to the downside. So I am looking for further downside. How deep? No one really knows. I couldn't tell you. All I could do is monitor the price action, volume, and see if there's a lot of fear in there. I will tell you this much, that there's a lot of retail buying up at these levels, and I've looked at inflows, and they were the highest since 2007, and that's pretty scary at the all-time highs, no less. So if this market does roll over, look out below, because the first sign of weakness, the retail's going to get out, and they're going to really start pushing this market low, because there's a lot of longs that will be trapped up at these areas at 1650, 1700. So just keep that in mind, okay, for your analysis. Now, obviously, even if you're day trading, you still want to know the overall big picture, and that's what I like to look at every night. And right now, all I'm doing is just day trading, and I'm not looking for to build any position. However, I will build a position when the time's right. And I wanted to show you, speaking of that, we had great calls in crude oil to the upside and the retracement back down again. I am still looking at crude for higher prices, but not yet. Gold, I mentioned gold short at 1350. I don't have the charts because there's really not much going on at the moment. I'm not going to bore you guys with charts that are either going down already and charts that are consolidating and looking for lower prices. So crude oil, I like it a little bit lower before we actually start looking to step in long. Gold, I've been saying gold short 1350, 1400. Now it ticked there by the penny and then rolled over. Never really gave us a quick entry. I like to see a 1 or 2 day hold up at these areas and then break that low before I enter short. That gives me that extra confirmation, especially in gold. You don't want to be short gold and next thing you know it's up $15, $20 the next day. So I'm watching gold and of course crude oil. The next sector that I do like short would be the semiconductor sector. And the reason why is there's a head and shoulders pattern, and I like looking at seasonal trends, and the semiconductor sector comes in weak up into this area of same time with the VIX. So we are looking for some weakness, and I think that if we can get some sort of a bounce on this right shoulder, right up into this 20-day moving average and fail, I'd be looking to short. There's a few big ones in that area: Texas Instruments, Broadcom, AMAT, AMAT, Intel, INTC, Micron, MU. Those would be the candidates to look to short. Or you could just actually short the SMH or the XLK. Those are two ETFs that you can short, just to don't deal with any type of individual companies. But I like this short, and I look back into the Trader's Guide, and this has been week 18 years in a row. So the probability's on your side. So if you want to look for something short, if you're looking for weekend, don't forget the market rallies. You know, they might have a little bit of weakness, but they're going to, in general, rally with it. So it's going to be a tough short. So you got to time this with the market, okay, guys? I'm not telling you to go out and short this right now, but obviously, and this head and shoulders has not triggered, so we have to break this neckline, back test it, and that would be an ideal short. Or let it run up to this area here and start putting a little short out. You know your risk would be the top of this right shoulder, or if you have enough room, would be the top of the head, okay? But I like this short. I like this sector going forward, looking for some shorts. I like to get some green, a couple days green, and then fail before I like to get short. I like to get short into these resistance areas, or a break lower if I miss it, and then back in here. So keep that in mind going forward, okay? Another one is the NASI. This is the daily now. I show you the weekly every week with the stochastics, but here's a daily. You can see what's happening. We have negative divergence here in RSI. We have negative divergence on a daily NYSI, which is the New York Stock Exchange Summation Index, and we have markets rolling higher. So this is just another sign for me that that this market at least needs a break and needs to consolidate and drift lower. Now, again, we could just literally just drift lower on low volume, which is going to be bullish. So we need to really understand that, and we need to watch what the price action is doing, because price is king. Okay. Another one is the yen. Yen started picking up steam again. I haven't showed this to you only because when the yen was rolling over, markets were obviously, all of 2013 running higher, and then of course we had that pop out, and so the yen and the equity markets are inversely correlated, right? We have a stronger yen, we have weaker equities, and don't ask me why. That's how it works. That's how it's been working. And then up in here in this area here, the yen hasn't really done much, and equities just continue to rise. So I just didn't want to show it to you, but I look at it every day. We had this little bear flag here that did not break, and now we broke out of the bear flag to the upside. Okay, so this is something to watch for now. While you're trading even intraday, you might want to look at the FXY if you don't have the yen future. All right, so keep an eye on that. This looks like it's grabbing some legs. Look what's happening to equities here, the line chart starting to roll over again. So this is a good inversely correlate, just like the VIX, for some intraday price action, give you some sort of clues of where the market is headed. Lastly, let's take a look at the dollar. Now, the dollar is selling off it. We broke that 200-day moving average on the daily chart here. So I'd like to see this thing hold a little bit, at least hold this pivotal low here, and then start to get some momentum and break higher again. Now, remember, this relationship we have inversely correlated with equities can change, right? We can go lower with equities, and reason being is when we have foreigners that come in and buy our goods and services and real estate and stocks, they have to what? Convert to dollars. So if you have people running out and not looking to purchase equities as much, you might have the inversely correlated dollar effect. Remember that. And it's not me to say, okay, we're going to switch now. It's just whatever price action does is what gives you a little bit of clues and gives you some signs of what the relationship is. Right now, I still think it's inversely correlated. A couple of days doesn't make a trend, but we need to see more evidence that the dollar is now following suit with equities. Right now, it really isn't. It's still inversely correlated, but I'm watching it. So let's keep an eye on this pivotal low here to see what happens. Now let's get into equities. Let's go into the charts here. As you can see here, we did hold the 20-day moving average on the spiders. So we do have a double top in here, as you can see with the sign. We did break above it and then failed, okay? We have this uptrend channel was still intact, but now we're outside of it and basically clinging to the 20-day moving average. In the spiders, I'm looking for this lower trend line, this lower uptrend line at 167.50, and then, of course, the 50-day moving average of 165.24, and then we would reevaluate it. Take a look at the 30-minute. As you can see here, the Bollinger Band started pinching. We had a big move here. We had consolidation for 3 days, a big move up. Now, it's starting to pinch here, but we still have a little bit more work to do. Maybe we get a move up, some consolidation, and then let's see where the Bollinger Band starts to pinch, at what price area, and then let's see if we can get some clues of which way this market is going to be headed. Again, I think lower prices ahead. We have lower lows, lower lows, lower lows. So I do think that the markets are headed lower. Now, it doesn't mean that it has to happen every single day, right? We do want some green. So if you do think the market is headed lower, it would be an ideal short. Okay, diamonds. Take a look at the diamonds. Now, the diamonds are worse here. We had double top, failed uptrend line from November of 2012 lows, and now we broke the 20-day moving average. Next target is going to be the 50-day moving average, guys. Now, we could back test here. Okay, so that's why I said let's be cautious. Use caution. If you're really looking to get short, I wouldn't just get short from 3 days of having 3 down days. Let's take a look at where price is taking us here, okay? And here is the transports. Now, the transports has just been really funny. Looking at analysis off of that. You know, they lag. You know, they are the leaders here of the 5 indices that we follow, right? The transports and the Russell are the 2 leaders. And then you have, of course, the Qs, S&P, and Diamonds, which is the Dow. But it's just so funny. It plays catch up. It breaks out, and all of a sudden, it's the worst. It's the weakest of the sectors that we follow. So it's just crazy. This is the November 2012 lows. Look for a break below that. You're going to get that 50-day moving average, and of course, you're going to have this horizontal trend line support as well come down into about 111.68. So transport's giving us clues that again we do see some further weakness in equities. And here's the IWM. Same thing, guys. The IWM broke down below the 20 and closed right at the 20-day moving average. Okay. Uptrend line broken from the bull flag. We popped out now, looking for lower prices here, probably at this area of this horizontal trend line support, which coincides nicely with the 50-day moving average. I think that that's going to be the spot where IWM is going to end up holding. And then, of course, you're going to have here this trend line support, this uptrend line as well. So just keep an eye, guys. You can see here. Now, again, we could bounce for a couple of days and then fail. So today is Thursday, and Friday is generally bullish, right? We have sideways to up drifting higher because a lot of people are gone. They're on vacation. So, you know, remember, I wouldn't get too crazy short here. We are up right now in the pre-market, and I really don't like taking any positions going into the weekend. So just keep that in mind if you're looking to trade. If you're looking to start building positions. Same thing here with Goldman Sachs. See the banking sector breaking down with the overall market. So not a good sign. Again, semiconductor, you want to see them moving up as well. And the Goldman here just barely clinging to the 20-day moving average. Same thing with the XLF. XLF actually worser, breaking down even lower. So this is going to be interesting to see if we bounce a little bit here. So again, if you're looking for a sector to short, right, or you like the banks, look for the weakest stock. Don't trade the strongest stock and then look to get short because it hasn't gone anywhere. It's there for a reason. The reason why it's been being accumulated while the weak sector is being is getting distribution, getting they're selling to buy strong stocks that are holding up well. So don't get fooled for that, because this one stock is up and everybody else is down. If you want to short weak stocks, buy strong stocks. That's the way to do it. And Apple here, very surprisingly holding up very, very well. Again, I'd like to see a lower high here, even if it's to the 20-day, but it can't really break more than the 440, 442 area. We've been really pinning this analysis pretty well. This is a real big base here, actually, for me. If you can see here, let me just open this up. We've had some good calls in these head and shoulders pattern. And here now we're just basing up in here, okay? So Apple's going to need to hold the next low, and then we could take off that pivotal low. And then I would say it would burst higher and at least get to the 500 area. So just keep an eye on that as well. And then lastly is the Qs. Qs above the 20-day moving average. Now, big cap tech is holding up well. So it would be interesting to see if that succumbs to some selling. Now, I saw Amazon starting to sell off a little bit. LinkedIn holding in quite well. Google starting to sell off a little bit. So there is some cracks in the wall, guys, okay? So let's keep that in mind when you're looking to build a position. Now, again, I still think the market needs to prove itself that it wants to go lower. It is 3 days. We did have a great call in the volatility in the VIX, and I still think that's going to be a good trade. But we just want to, take a little bit of profit, and then let's back off a little bit. Let's see where this market goes. Make it easy for yourself. Don't be going against the trend because it's just not worth it, especially if you're day trading. If you're day trading, stick to the trend. You got 6.5 hours a day. That's half the battle. Look to get in, manage your positions, and you'll do well. All right, guys, have a great day. We'll speak to you tomorrow. Take care.